The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruits Stock Club. Let's go. Hey, look, interesting week, but it's always a pleasure. It's my new day on Wednesday. Right now, I'm coaching my son in basketball. Man, my team is looking pretty good. This is my first time coaching basketball ever. All right, so look, a few things. I'll get back to that, but a few things I just want to go. We're going to go into today is we're going to talk about the Santa Claus rally. I put Christmas rally, but you know that's what happens when you're a one-man shop, right? The Santa Claus rally. We're going to go over the jobs report, and I'm going to ask you a question: is the jobs report the reason for the downturn in the stock market? All right, it's the job. We're gonna go over that, and also I'm gonna go over some stocks I like. Also, I'm gonna show you I'm gonna show you some of my plays are negative right now, but I did have one nice positive option play that I put in that I was able to execute, and now I'm gonna show you the decision making. So after you execute an option play, you have cash, right? How do we turn that into long-term income? All right. All right. We're going to talk about all those things today. All right. We're going to talk about all those things today. First, quickly, let me get into before we begin, man, subscribe, share, please. Like, subscribe, share, man. Add me to put the bell on so when I bring a new show, you guys can know that I'm live, or my show. Unfortunately, I had it on Thursdays, but it changed to Wednesday. But if you just subscribe, you'll know when I'm coming through. All right. So let's go to a quick disclaimer. The information provided in the First Fruit Stock Club podcast is for educational and informational purposes only, and should not be considered financial, investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, potential loss of principal. Past performance is not indicative of future results. Always conduct your own research. The First Fruit Stock Club is an affiliate. Do not guarantee you any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. Man, we got to do the legal thing. Get the legal thing. All right, let's get started, okay? Man, the Santa Claus rally. All right, the Santa Claus rally, if you never heard of it before, it is basically, and I discussed this briefly last week, but I wanted to go into detail more, is that it typically refers to the last 5 trading days of December and the first 2 trading days of January. And the thing about this one is this year's is broken up, right? It's going to be broken up. So we have to count the last 5 days because Christmas, of course, comes into that. And then the first 2 days of next year. So we're, I guess, 7 days total. All right. So let's look at what history says. History says that, and I did it based on, man, because November was a pretty bad month, right? And November is usually a positive month. So I did it based on there we go. I did it based on when November When November posts a loss, historically, December tends to experience stronger than average gains. In some decades, almost double the typical returns. All right. So, what are those returns? What are those returns? All right. The returns for the last year, over the last 50 years, November rallies 73% of the time and averaging 2%. So we're saying double. So this month is expected to be at 4%, right? And also, so December, I'm sorry, November, of course, November was negative. So now, and in December, being positive 73% of the time, averaging 1.6%. So can we expect a 3.2%? And we're almost basically more than halfway, just about halfway through the month, and more than halfway through the month. And so, in order for that to happen, the market needs to get going, right? Because it's beating us up. I've been beat up November. I'm getting beat up, and even though I had a nice little gain, and I'm gonna show you my gain. Um, but as of for most of my plays, they're down 50%. I mean, I'm not even going to front. That's what it is. That's what happens sometimes. So, but let's get into what I think is the cause of the market right now. So, just recently, Tuesday, the jobs report came out. All right, November non-farm is going to discuss November non-farm payrolls, right? Unemployment rate and hourly earnings. Delayed release due to the data disruptions, right, of the government and the government shutdown. So these numbers heavily influence expectations and risk. All right. So so let's look at it. So how does the jobs report affect the market? So if the jobs report is stronger than expected, think big payroll gains, lower unemployment, market reaction, stocks can drop in the short term. A stronger labor market, right, may delay rate cuts or even stay hawkish. So what happens is that if it's stronger than expected, then the Fed say, hey, we don't need to cut rates, because cutting rates is all about, hey, we don't think the market is doing well. Well, we're going to give some people opportunity to refinance, right? We're going to give people opportunity to refinance, right? And but what happens is that if it's weaker than expected, fewer jobs, rising unemployment, softer wage growth, market reactions, stocks tend to rally. Weak jobs, higher profitability of the Fed rate cuts. Rate cuts equal liquidity for tech and growth stocks. Well, guess what's getting hammered now? Tech and growth stocks. Well, guess what happened? The job report was over 62,000 jobs in non-farm payrolls. So that, I think, is the major factor why the market in the short run is having a tantrum right now, right? And so, but I think as so we look at these two we look at these two things that's going on right now, right? We have the Santa rally, basically institutions, hedge funds have to close out their year, right? But we also have the jobs reports effect, where it was stronger than expected. So now it's like hawkish. So we're looking, and we had cut in December where we're looking at cuts next year. So maybe they're saying that, hey, we may not need cuts next year or as many, because the jobs report was positive, right? But we don't want anyone to lose their jobs. I'm just giving you the information of how it's disseminated and taken in and included in investment decisions, right? That's what happens. And through these investment decisions, right, that's usually determine if the market will go up or down. So jobs is real important. So we'll see how this plays out. Hopefully we can get to the end of that and it averages 1.6%. It would be lovely if we get to 3.2% gain in this month. But like I said, this is a year like no other. This has been a year like no other. So we have to see. All right, so let's quickly let's get into the market. Dow Jones Industrial Average closed today, Wednesday, 228 points. Um, the S&P 500 closed down negative 78.83 points, and the Nasdaq closed down 418 points. Man, so let's look. I always compare the last week versus this week, right? Always a comparison. What I do. So last week, um, on a weekly, so last Wednesday, from last Wednesday, the market has been down 388 points. The Dow Jones Industrial Average, the S&P has been down 135 points since last Wednesday, and the Nasdaq has been getting hammered. The Nasdaq is down 763 points since last week. But it's important to know. Remember, the stock market is a time machine. It goes forward and goes backwards. Right now, it's going backwards, but it has been going forward. And let me show you how it's been going forward. For the month, if we go back the month from the date, the Dow Jones is up 1,833 points for the month. S&P is up 115 points, and the Nasdaq is up 313 points. So we had a little run, and right now, we will see. I don't think we're going to go back to the month lows, but you never know. But I do think we have a little bit further to go. I have a little bit more pain to endure um, with the market, but man, that's the way you play the game. And and let me just say this. And I meant to get into this in the beginning. I coach my son in sports, and we often, when we first started, kids, separated via age group, so you play 9, 10, 11, 12, whatever. And my son started out on the lower end of the age group. So a lot of times when we played teams, we would get beat, right? And he would get discouraged. And I would just say, look, got to stay in there. Things may be rough, but you'll get the opportunity, right? You'll be on the top of that age range, and you'll match up better than everyone else. And yes, as you've seen, if you've been watching me, we've won numerous championships. We've played in championships, and it's been great. But that's comparative to the stock market, man. It goes up and down. You have to take the good with the bad, and you have to take notes about where you are. So one thing I've been doing is taking some new notes. I've learned some new things, and I'm definitely going to start executing some new strategies that I put into place, especially with options and the market in general. But the bottom line is you can't give up because your championship is out there. You're gonna get some wins, especially if you watch me. I can't guarantee anything, but I've had some wins in this market, right? So, but the wins are out there. There's a bull market everywhere, and I'm gonna show you. All right. So look, man, what I was able to get, man, GEV. I discussed this briefly last week, but I wanted to go into a little detail more. Is man, I had a 258% gain, right? Well, it was up 258% for the particular day, right? We were down, but we came back over 178%, 178% return on my money, right? Which was great. So now the decision is, right? The decision is now is like, all right. So because of the market down, it's like, should we go back into the market? Right? You have to have these decisions. Should we go back into the market and buy some more? Because a lot of options have depreciated, in value. Stocks that I like, um, and like, should I go back and buy some more? Which I probably will. I do think that we have some more to go on this little downdraft that's going on the market. The market sliding. I think we have some more, but I probably will buy some more. But the other decision I can make is turning that income, right, that capital gain income to long term to long term monthly income, right? And I can do that by investing in dividend stocks and dividend funds. right? It's one thing I preach is taking those gains, right, and putting some away. I'll probably put a nice percentage of this away and grow my monthly income, right? And I'll receive that, as long as, the companies I have. And companies been around for a long time. The funds that I'm going to probably invest in been around for a long time. All right. So those are the decisions that we have to make. And this is one of the reasons why I make that decision because you know, we get that gain, that 176%. Then we try to look at, oh, let me try to get that again and again. And right now, um, you know, it's been tough, like trying to find something else. And you look for that, and it may not be there right now. Dividends give us the opportunity to wait, right? To wait for the next time the market presents us with a good opportunity. Right now, there's a lot of good opportunities, but the opportunity may get better. Right. So we still should maybe buy. I'm still buying small bits, but I'm not going all in because I think we still have further to go. But you never know in any market, you never know how far you're going to go down, when the market's going to turn around, and when it's going to go up. But you have to be prepared. Possibly, we if we get into the Christmas rally, we have the last 5 days. We can possibly get man. If we love the last 5 days, we get go up. That means that we're going to be the market is going to be hopping. Is going to hop. Maybe the last part of if history is correct, right? But we don't know. This is a different time. I was just watching the president come on and talk about the economic issues that we're having. And but this is a different time, but still, even though we're at a different time, things can still go to go the way of history. But we'll see, right? I am in position. So let me show you some of the. I showed you the up. Let me show you some of the plays I have down. Man, Palantir right now, we're down 40%. Woo, down 40%, but I don't care. Palantir, if I get a Palantir option at $5, I'm buying it all day long. And you just have to wait it through, right? This is not until March, the 20th of March, the end of March. So we got nice amount of time on this option. We'll see what happens. The next ones I have is Tesla. Man, Tesla's down 43%. Probably should have closed it. Tesla's at a high right now. But the thing about it is, will Tesla break out from its current high? Right? I should have took my money off the table. I didn't. I don't know what I was thinking. I had a couple of these ones I'm showing you have been up probably like 30 to 50%. And but like you play the game and sometimes you'll make good decisions, sometimes your decisions aren't the greatest. Sometimes you decide to wait and be patient and then you lose out. I have definitely learned from that is that sometimes I'm just going to take profit, but what happens is you get spoiled. You get 174% gain and you're just like, oh man, so if I let it go now, then okay. I let it go now, then we're going to have some issues. So, I mean, I let it go now, then I'm going to miss the upside, right? But sometimes there's nothing wrong with taking a profit. Taking a profit from where you are, where we are is perfect opportunity. So Tesla, man, my Netflix, that lets you know how much I was down. It was up. Today we got there was some information on Netflix may win the bid for can't think through the studio. Sorry, can't think the studio. Hold on. Netflix is in the bid. The studio, what's the name of it? So Netflix is currently Warner Brothers. All right. So they're currently buying Warner Brothers, which is a great studio. I think that's one of the number one studios. And it's a big deal because of the power that Netflix will have. Um, they're number one in streaming and they're really expanding. and what they're getting, they're getting the Warner Brothers studios and being able to produce a lot more of their um, their work. But you always want different options for people who for actors working in the industry, for people who looking for a streaming service. And their thing is that they say that they're only number 3 in watch time among all the other shows. They're number 3 in watch time. And in comparison to YouTube, right? And I think YouTube did number 3. I forgot the number 2. But in regards to views, that's how they compare now. So that was their argument, and their argument is still the acquisition has to go through scrutiny, and we'll see if it's allowed to go through. All right, still has to go through the courts, so we'll see what happens with that. But I'm a holder of Netflix. I'm gonna buy Netflix. One thing you want to think about when companies buy other companies, right? And remember when they buy other companies, even though they pay cash or stock. Remember, a lot of times in the stock market is based on the company's revenue. So what happens is, of course, they buy the other company, then the other company's revenue becomes a part of their revenue. But what happens is, during the initial part of the company, that revenue isn't counted. I think there's a period of time where the revenue does not count. So what you want to be able to do is you'll be able to get the new asset basically at a discount at some period of time. I'll bring that up next year. I know that is an opportunity for investors to get that new revenue from a acquisition before it actually gets put in the earnings of the company. All right. So look, we're coming against the new year. I'll probably do something next week on preparing for the new year. It's coming in tax time. Think about giving money away. Man, life and investing, it's all about, I say, about what you do for others. And the bottom line of First Fruits is taking those first dollars, right? Put into the market, supporting your family, and then giving a portion of that away, right? And we become honorable, and we're doing what we're supposed to do. And what happens is that when we don't do what we're supposed to do, then there are problems that come along with that. All right. That is the basis of First Fruits, to gain, right? To play the stock market, which is a blessing for us to have this market. There are a lot of people around the world wish they had access to our market, and you have access to it. But it's up to you to make decisions and decide to use the market to better you and your family. All right. So, man, I appreciate you guys for giving me a few moments of your time. Don't forget to click subscribe, and also to share my information. I try to bring you information every week. I work on it from tonight all the way to next Wednesday. I'm bringing new information as it's coming in that I think that will be valuable to you. All right, man. I think everybody continue to be safe and continue to enjoy your holidays. I'm trying to decide if I'm going to take a break the last week of the year, or I'll probably just do a quick Christmas segment, briefly while the family is taking a break. I'll probably come down here and talk about stocks, my favorite topic. All right, guys, until next time, be fruitful.
The market is volatile, the stocks keep going down, then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.